Good evening, everyone. Welcome to our very first professional network event. We're so excited that we had a good turnout. We have students and alumni here with us this evening. We're very excited to present this information to you. In case I did not get a chance to meet you, I am Michelle Biggs, Executive Director of Alumni Relations here at Southeastern. Like I said, we do have students and alumni here, and we certainly welcome you. This is for our accounting and financial services professional network. And just to give you all a little bit of background about how this came to be, we really wanted to start concentrating on connecting our alumni via industry instead of region or where they're located. And so we started thinking about ways that we could, have our alumni come together, talk about what they do in their positions, where they are in their careers, because we were finding that a lot of our alumni, especially our younger alumni, really wanted to be able to use the Alumni Association for career advancement, career development opportunities. So I do want to recognize a few people that are here with us this evening. We have our board member, Shane Purvis. Shane's over here with Fidelity Bank. We have our former board president, Dickie Whitson. Dickie's back there, thank you. We have two of our Gold Council members, Karen Burks over there and Allie Dyer. And for those of you, for students or anyone who doesn't know, our Gold Council is our graduates of the last decade. It's our Young Alumni Advisory Board, and they help us to put together programming and ideas for our young alumni and really just sort of help us to engage with that younger generation. So like I said, this is our first event. The professional networks are actually housed on our Southeastern Connect platform. In case you are not familiar, that is our networking platform that we developed about 3 years ago, and it's specifically for Southeastern graduates and students. We just started, allowing students to get on there because we wanted to have an opportunity for them to network and have conversations with our alumni. And so if you're not on there, there's a banner that y'all probably saw out in the lobby. We do encourage you to join that platform. This network and all of the other professional networks that we're going to be forming are housed on that network. And you'll actually be able to go on there and join each network and have conversations with your colleagues or people in the industry. Also, if you're interested in getting more involved, we do have an engagement team for each professional network. And they're just sort of serving as an advisory council to help us identify hot topics like cryptocurrency, like whatever else that they think that people within the industry might want to hear about. So we encourage you to get involved that way. So, next, just wanted to introduce our speaker, our main attraction. Lou Guyader, PhD, is a professor in the College of Business where he has taught accounting for 4 years. He speaks about cryptocurrencies when teaching the statement of cash flows as featured in Tesla's financials and addresses blockchain in his accounting theory class. Lou cut his teeth on cryptocurrencies earlier than most. He was a senior banker at a French bank involved in creating the synthetic European currency, the ECU. The ECU existed in electronic form only and was never coined. In 1998, the ECU became the modern euro, which is now coined. Dr. Guyader came to Southeastern after careers in international banking and in accounting at PricewaterhouseCoopers. An active CPA, he earned his PhD in accounting at Columbia University and his MBA at UVA, where he met his wife Lee, a native of Hammond. Welcome. Thank you so much for having me.
Thank you very much. Thank you very much, everybody. It's a wonderful opportunity for me to share the little knowledge I have in this area, but I'd like to acknowledge one or two people in the room also. My wife was mentioned. There she is. That's Lee Travis of Hammond, Louisiana. I'd like to acknowledge my colleagues, Dr. Brown, who's the head of our department, but I also want to mention, since we're going to get into some thorny subjects, I brought a lawyer. That's Douglas Curate, who is, this actually is a repeated theme in many of our meetings. Douglas is actually one of our law professors, people who have accounting degrees and aspire to get the CPA must take law courses, and Douglas is the guy for that. So I'm going to speak to you about cryptocurrency, but I have to do this in a limited amount of time. And I certainly may know something about it, but I don't know how much you know about it. And I decided to strike a theme that would possibly remind you of what it was like to be in school, those of you who went to Southeastern, by entitling it Cryptocurrency, Clever or Criminal. And I would like to conduct the first poll of the class. I'd like to ask you all, regardless of what you know or don't know about cryptocurrency, and you can vote more than once, you can vote 2 or 3 times, and we'll take this poll twice. How many of you believe cryptocurrency is clever? The choices are clever, criminal, or at the moment you have no opinion. And then we'll see what happens after I finish talking. How about, remember you can vote more than once. Clever? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. That's an accounting professor counting live in front of you. How many people believe that cryptocurrency is criminal? 1, 2, 3, 4, 5, 6, 7. All right, so we have a meaningful difference. How many of you have no opinion? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. And that's interesting because some of you voted no opinion, but also voted for one of these 2 things, and I don't always understand that kind of a vote, but that's all right. Well, let me begin. Here's what I intend to do. First, I intend to describe cryptocurrency, and in particular, I want to describe it by trying to answer the question, is it money? Of course, those of you who are experts in accounting or finance, my Fidelity banker there would cause me to spend a little bit of time to define money first before I ask the question. And that's one of the clever parts of crypto. 2, how does it work? Specifically, how do you all get to use it? 3, the moral question. Why should I use it? Joined by the moral answer, are there any risks in using it? And then questions and answers, but I'd like to change the format one bit, and that is I'd really be happy if you ask questions as we go, because I don't know how well I'm communicating, and I don't know what is a good stopping point for some of the issues. So please just shout out or raise your hand and ask questions as you go. You won't be the only person interested in your question. What is it? I'm going to be very careful here. I'm not a computer scientist. It is electronic code. Cryptocurrency is electronic code that is sent and then received largely on the internet between computers or similar platforms. I'll give you an example of a similar platform before the end of the presentation. There's a takeaway from this description. Let me repeat. It's electronic code. It's not what I have in my wallet. It's not really your credit card. It's electronic code. That means I can take a computer science person here at Southeastern, have them code things in languages I don't understand, and it can become cryptocurrency, and that's the second takeaway. If you don't like the cryptocurrencies that exist, you can create your own. You can have your own cryptocurrency economy as long as you get one other person to accept your cryptocurrency. Notice that I haven't mentioned the cryptocurrencies that are the most popular. There are so many of them. They're mutating, expanding at a very rapid rate. It's almost an economic pandemic. But you've probably heard important examples like Bitcoin, which has been around the longest. Or you've listened to Elon Musk in his distinctive South African accent talk about Dogecoin. Right. Well, there's Ethereum, there are many others. But for those of you who didn't understand electronic code, let me put it in words I understand. It's an algorithm. Well, that doesn't help at all unless you know what an algorithm is. It's math put into code. It's electronic. Here's what it's not. Here's my accounting background coming up. It's not cash. At least it's not cash the way we define it in many parts of the world, including at a bank. It's not cash. It's not cash in the sense of dollar bills or coin that you can carry, or the equivalent in other currencies. I want to remind you that the world does not stop at the boundary of Tangipahoa Parish. Outside of the United States, even further away from us, there are people who are not familiar with the US dollar, and they use things like the euro, the Japanese yen, the British pound. We call those foreign currencies. They call our dollar a foreign currency, which is probably wrong. It's not a foreign currency, it's the US dollar at the end of the day. But what crypto is not is one of these recognized government-sponsored currencies. Second, there are legacy forms of cash that I remember my grandparents talking about, including gold and silver. And if you remember the history of the United States before President Nixon, even our dollar was backed by gold. That's legacy money, legacy exchange mechanisms. It's not gold, silver, or other precious metals. There are currently popular cash substitutes that include gold, silver, but also diamonds. You've heard of people trying to bring diamonds back from South Africa, trying to hide their wealth in diamonds. It is not recognized by any government as a legal tender. That's an important statement because it's not recognized by the government, so when you're using it, you're completely at risk. When you're using it, the likelihood that you're engaging in a transaction that the government doesn't want you to engage in rises. That's a moral hazard issue. Is that good or is it bad? We'll discover in the next coming slides. Conclusion, you may disagree with me, and now I'm really going to break the vocabulary book. It's not really money. Notice I didn't use the word cash. It's not really money, but it is something. What is real money? In academics, we have ways to characterize money. First of all, it has to be backed by a government. In the old days, the coin of the realm. It has to be legal tender. It has to be recognized by the government. This is not recognized by anyone. It's recognized in a negative way. Certain governments have said you may not use that. Do not go to Shanghai or Hong Kong and try to use cryptocurrency. It's prohibited. It's a means of exchange. That means I want to buy your car, which you're selling, and you'll accept the cryptocurrency. It's a means of exchange. Well, it is that. It's a store of value. But I was speaking with someone outside, and it became very evident that they already knew that cryptocurrency is not like the US dollar. Its value fluctuates wildly, and that characteristic changes its usefulness and whether or not we consider it money. It's not really very reliable. Is there anything like inflation? Yes, we're experiencing inflation now. We're not experiencing hyperinflation, but we're on the road to it. Mexico experienced hyperinflation 30 years ago. Their peso became worthless for international transactions. That's one way currency can become unreliable. Another way that currency can become unreliable is lack of convertibility. Bitcoin and other crypto are successful because they are used. Stop using it, it will fail. And it will fall faster to the bottom of the ocean than a lead balloon. Its success is based on people continuing to use it. Third, its volatile value can itself destroy the characteristic of money. When I buy your car, what kind of car am I buying from you, by the way? Choose a car. Choose a car that I would like, please.
Lamborghini.
Oh yes, my wife really is not going to be happy with me. Sorry, Lee. I was thinking of Ford 150 with less than 40,000 miles because we can use it at home. But even a used Ford 150 low mileage, one Bitcoin, because I understand Bitcoin is worth about $40,000. But about a year ago, it was worth $20,000. So good for me for buying the Bitcoin a year ago, holding on to it, because now I can finally afford the Ford 150. I have a way to go before I can afford the Lamborghini. So Lee, you're safe, you know. But tomorrow, that Bitcoin might be worth a lot less. It's extremely volatile in value. So the idea that I can save money in it and save money reliably for future consumption starts to fall apart immediately. What then is cryptocurrency? I told you what it's not. I've taken everything that I just discussed and I've either colored it red or dark blue. Red means block. We've got a real problem. It's not backed by the government. I've already said that the government of mainland China says don't use it. Japan is heading in the direction. The high volatility in value that played out for me in our transaction could play against me tomorrow, and it has. The value of various cryptocurrency is extremely volatile. But here are the positive aspects and why people continue to use it. It's a means of exchange. I can buy the car if I have enough Bitcoin and he accepts Bitcoin. That's an economy if we have two people who agree. It's not really a store of value, so I colored it blue, but I doubt it. It's the volatility that kills its value as a store of value. It has a limited supply. Let me explain two things about the limited supply. When a thing is in limited supply, it has greater perceived value. We all know that from daily life. But the people who created Bitcoin purposely announced that they would limit the creation of Bitcoin so as to backstop the value of Bitcoin and replace the fact that there was no supporting government backing it up. There was also no backing by gold. So they substituted, they were very clever. I just voted clever. They were very clever and they gave me economic shortage in order to support some minimum value, but they didn't tell me what the minimum value was. They thought that I would accept it as a sign of credibility, and you're supposed to also. But it's a double-edged sword, because in a moment I'm going to tell you that the global economy is not much bigger than the transaction that I was trying to persuade you to engage in with me, not the Lamborghini, the Ford 150. The entire global market for all cryptocurrency, it is estimated, is less than $3 trillion. That's nothing. That's less than 5% of the global economy. In that respect, it is a failure. However, because these are means of exchange, it's money to some people. Some people operating on the margins are making a fortune from it and finally engaging in transactions because they have a means to do so. I'll identify a few such people in the coming slides. Cryptocurrency, is it really clever? Can I actually use it? Things can be very clever, but if you can't use it, you won't buy it, you won't accept it, etc. So how does it work? If you transact in crypto, I have, in a hidden, subtle way, already said, you already have to have a computer, you have to be on the internet, you have to be computer savvy. But there's one other thing that comes upon this that was featured by Maria Bartiromo on TV just about 2 months ago. She said, I want to talk to you about crypto, but I've changed my mind. Because what I really want to talk to you about is blockchain. And the reason is, you can't use crypto without using blockchain. Blockchain is the exchange of electric code down a chain of communication that allows crypto to exist, to be exchanged, to be transferred, to be held for savings, etc. Without blockchain, no cryptocurrency. It's not just about electronic code on the internet. You have to have blockchain. And I can't really spend a lot of time explaining what blockchain is to you, but I can tell you that as an accounting professor, I'm deeply concerned about it because we really don't know how to audit blockchain transactions yet. It is one of the great mysteries that our profession is facing. When you use blockchain, you are using a distributed ledger. The word distributed makes accountants quake, makes accountants have nightmares at night. If I'm an accountant, if I'm running a business like the not-for-profit that, Mr. Purvis, you're going to be in charge of as treasurer, I expect I have a general ledger, and the general ledger is in my control. The accountant who creates your Form 990 expects you to have control over that general ledger. The whole idea is no control. Control stops at the point where you press the button and send the crypto, or you open up your computer and you see that you received the crypto. Everything that happens in between those two steps, you have no real control over in the classic accounting or finance sense of the word, because all the transaction happens out in the internet somewhere using a distributed ledger. And the distributed ledger is an economy of its own. It's a society of its own. Because transaction details are distributed in the crypto economy through a distributed ledger via blockchain. Each economy's participates in the distributed ledger to confirm that you have a good blockchain element. If you need 3 or 4 or 500 blockchain elements, each of those must be confirmed by someone in the cryptocurrency economy, and when you get the right number of electric code blocks and they're chained together right and they're confirmed together right, you've got a valid transaction. That's really different than stepping up to an ATM, putting in a card, hitting your code, getting $100, and then going off to a football game here at Southeastern, right? I will tell you, it typically takes an enormous amount of time to complete any distributed ledger blockchain confirmation series. And that's one aspect we have to talk about in a few minutes. Transactions are complete only if confirmation is received. But you don't know who's confirming what. Is it a computer? Is it another person? Is it your spouse? Well, yes, thank you, Douglas. That's where it stops, you know. And sorry, Lee. And, but the other thing I would say is this has become such a widely used mechanism in the edges of certain economies, in marginal spaces that we'll talk about, that now, rather than exchanging crypto as a type of money, we are exchanging things that have real legal standing, like titles on real estate. Titles on real estate have been transformed and converted into electric code and then transferred from buyer to seller using blockchain technology. Blockchain is a way for people to speak. You form your blockchain. It's full of electric code, 5 or 6 or 500 blocks in a chain, all confirmed. You need one other thing. You need a key to access that chain. Otherwise, you can't get the crypto I've sent you. And I can't access the crypto to send it to you. Do you have a car that still turns on with a key? I don't know about my wife, but I lose my car keys all the time. Lose your key, you lose access to your currency. And there's no backstop here, right? You lose your credit card, you can get a new one within a short number of days. There is no backstop. This security feature around crypto is actually a block to its utility. It's not as flexible as the kind of cash and credit cards and other devices, checking accounts and checks that we're used to using. But it's meant as a security device. Your transactions will be verified. They go through an internet confirmation process. I emphasize the word internet. I emphasized before, you got to have a computer. You don't like the internet, you don't have the computer, you don't pay your energy bill and you can't power it up, you're dead in the water. You're not a cryptocurrency participant. But each transaction is uniquely identifiable in the distributed ledger economy. As an auditor, as an accountant, I think it's not readily identifiable the way I can verify a standard invoice or a part coming into my warehouse or leaving my warehouse. This is electric identification, pages and pages of codes with confirmatory electric code, accessible only if I have a key, a virtual electric key. It's not the kind of economic transaction most of us are used to. How does it work? If you transact in crypto, you've got to use blockchain, and I'm sorry for the second time, I don't have time to talk about blockchain today. Maybe it'll be a follow-up conversation. Cryptocurrencies are like equity securities because they can be exchanged in fractional amounts. That's a mouthful. I had to tell it to you because I was stunned today when my wife said Bitcoin is up to 41,000 per Bitcoin. My last check on it was worth 21,000, and I thought that was too high because I couldn't buy one Bitcoin either. What I've discovered is that if you don't have enough money to buy one share of Berkshire Hathaway A, you're okay. Put down your $1,000 and you get 1,000 divided by 400,000, you get a fractional Class A share. Ditto Bitcoin, ditto the other cryptocurrencies. So that sounds like flexibility, but it defeats the goal of keeping these things scarce, right? It's a contradiction, but that's how the trading has emerged. To send cryptocurrency, by the way, there's a secret. You have to acquire it. I think that means you spend dollars to buy the crypto. Once you're into crypto, you only get your dollars back one of two ways. You sell the crypto. Now there's going to be a haircut on that, buy, sell, spread. It's going to be huge. Or you use it to buy something, which means you're part of the economy. You're creating GDP. Good for you. And then I buy the car, and then I can sell it third hand, I hope at a higher price. Buy high, sell high. Yes. You must be careful. If you have a PayPal account, how many people here have a PayPal account? Almost everybody. Elon Musk, thank you. That's how Elon made his first fortune in the United States. If you have a PayPal account, I opened up my PayPal account 3 months ago and I was shocked. There is a cryptocurrency option. And on top of that, I can drop down a menu and I can select from, at the day I did it, over 20 cryptocurrencies around the world. I didn't like it because my credit card has mistakes in it, my checking account has mistakes in it, and my PayPal account might have mistakes in it. I don't want my dollars in PayPal flowing out of my checking account and being deposited in a cryptocurrency account that only PayPal has access to. Because as of this moment, I have never done a cryptocurrency transaction, and that's the way I think I'd like to keep it. So I am very interested that PayPal has become functional. You can do cryptocurrency transactions through PayPal, but you don't escape blockchain, distributed ledger, keys, and all the other paraphernalia. U.S. brokerage firms, we were talking at the reception, U.S. brokerage firms, your counterparts in the securities industry, Mr. Fervers, are trying to find ways to add cryptocurrency as an investment alternative to your portfolio. Here's the problem with cryptocurrency. They don't yield interest. They're a currency that you cannot invest in something that yields interest. So it's more a capital gains play. It didn't work well for Elon Musk. In Tesla, they started to sell Model 3s using Bitcoin and Dogecoin, etc. They stopped for a while. They discovered that the accountants, PricewaterhouseCoopers, by the way, would not allow them to put the cryptocurrency they held on their balance sheet after the sale into the cash account. They put it in an other category called other assets. That can be a negative signal to investors. But on top of that, the accounting is very harsh at Tesla, and everybody must do the same accounting. You're not allowed to market the crypto. It's not like a share of Exxon or Berkshire Hathaway. To some who don't like volatility, that's really good news. But you are required to mark it down when the price goes down, and when the price bumps back up, you're not allowed to write it back up. That's American accounting for you. That's conservatism, and that's the way we like it. So Tesla has over $1 billion US dollar value of crypto at today's exchange rate on their balance sheet, but they've already reported losses in their income statement, and they're sitting on holding gains that they're not allowed to put back on the balance sheet and not allowed to put back to recover their income statement. And how any analyst can figure out whether it's worth selling Teslas using crypto when this sort of accounting applies, I don't know. Therefore, I don't know why you would want this stuff in your portfolio unless you have so much money you need to diversify, and why not? But brokerages are trying to figure out how to make this an investment class. Here's a critical comment concerning how does it work. I'm talking about holding crypto, even for a nanosecond. If you hold crypto, you're supposed to put it in a wallet, not the wallet that you have, not the purse that you're carrying with you. It's an electric wallet. Now, some of us have Louisiana Wallet. How many people have Louisiana Wallet? I have one. I open up Louisiana Wallet and I have my driver's license. I also have my COVID test. It's really handy. And then when I travel, like on a plane, I can download my boarding pass and I can put it in my Apple Wallet. Those are electric wallets. Electric wallets is where you keep your crypto. But guess what? You have to have access to the internet to access the wallet. You got to have a computer to access the internet. All of these preconditions apply. This became a problem for some people. So in the last 3 months, hard wallets were created. A hard wallet is a device that they will send you in the mail. It's like a plug-in. It's like a mouse that you plug into your laptop or your desktop. And for the time it's plugged into your computer, that device has the software necessary to create an electric wallet. But the wallet comes with the hardware device. And when you unplug it, you can walk around with your hard wallet and it has your crypto in it. But you can't access it until you get to another computer, put in your key, and do all that kind of stuff. You think it's great news. Here's what happened. A bunch of Eastern European disruptors sent a group of wallets randomly out to the United States, something like 200,000 hard wallets. And these things had one extra software line of code in them. The second you got the crypto in, it also went out in a separate blockchain transaction to the Eastern European people, and never to be seen again. I want to say for the third time, access requires a key, right? So that's how it works. No questions yet. I'm a little concerned. Oh, you do have a question. Okay.
So what is the key? Is it like a code or like a
It's like a
password?
code. Well, have you ever needed to open up your phone and you got to put in like 4 digits or 6 digits? What's your digit? See, you're supposed to keep it private. And then the question becomes, what happens if you lose your key? If I lose my key, there is a way to retrieve it. If I lose my password at my university account, I can get a replacement. I go through a process. It takes less than 5 minutes. As far as I know, there's no way to retrieve a forgotten key or a lost key, right? Sir?
So with the amount of hard keys that have been lost as far as some cryptos, would that prevent it from reaching a potential zero net balance worth? Because those pieces of the blockchain have been lost, does that mean...
Oh, no. It's been lost to perhaps you, the person who plugged in the hard wallet, but now that crypto is in the hands of somebody in Bulgaria who's going to turn around and buy a Mercedes with it.
Well, I'm not talking about necessarily hard keys that have been lost through exploitative methods.
I get your thing. Yes,
the-
okay. So this is a question I asked the other day at a crypto, I actually went to a crypto session. It's sort of something I have to admit, I went to a crypto session and somebody asked this very question and nobody gave a plausible answer to it. Nobody knows, how do the criminals actually break in? But then an auditor raised their hand and they said, I know how you can break into it. Have I been talking about you need a computer to access this? Once you open the computer, you got to join the internet. By the way, you're a human being. You need a human being to operate the computer and the internet at least one step. The frauds that have existed in cryptocurrency all relate to a classic accounting fraud. Someone who has authority at a company to operate crypto dials in numbers good for them and bad for their employer. It's like the treasurer at your church that takes only $2,000 a year, but is at your church for 40 years, and all of a sudden you discover, no, we can't renovate the church that cost $80,000 because it's gone with Tilly. It's that kind of thing. In accounting, we worry a lot about the safety of computers, who can get on the computer, who has access to it. Once you get access to a computer, you can do fantastic things if you're a criminal, and that's the second area where there's been fraud, and that's where, sir, people get control of other people's crypto. That's what happens. It's classic fraud. And yet I will also tell you, as recently as 4 months ago, I went into a continuing education session on crypto taught by a non-accountant, and they swore that the distributed ledger blockchain format was impervious to fraud, and that I, as an auditor, should be perfectly happy with this, and I should substitute distributed ledgers for everything, including my general ledger. So what I did after that session is I went to the website for the top accounting regulator in the country, the Public Company Accounting Oversight Board, and I just Googled to see what their auditing standards are on blockchain and crypto. And I was very disappointed because there was only a speech by one PCAOB member. These are the top accounting auditing regulators in the country. And they said, we've been made aware of cryptocurrency. And I'm thinking, you know, blockchain has been around for like 10 years. You've only been at the PCAOB for 3 years. We're aware of it. We're aware that it's new technology. We don't have time to invest in new audit programs on this. So please use our standing instructions for how to audit and account for new technology items outside of your accounting expertise. But those auditing rules have been around for more than 20 years. Don't you think a criminal who wants to break the back of an auditor can find the audit standards and become expert in them in about 2 days? Of course they can. So it's a terribly difficult situation. And did I answer your question?
Mostly, yes.
Mostly, but that's just it.
It answered the fact that they haven't really come up with a good answer as far as...
They don't have a good answer.
Mostly because it's partially a hypothetical.
Yes, but the other thing that has changed in the last 4 months is no one who is properly informed is saying anymore that distributed ledgers and blockchain are impervious to fraud, because the second there's a computer or a human operator, hacking is possible. In fact, I went to another presentation 2 months ago where people had actually categorized crypto frauds in about 6 categories. You know, it's getting that specific.
I had 2 other questions/comments.
Go ahead. So this is like a Washington press conference. It's never one question.
This comment is more of adding to, I think, the criminal versus the clever side.
Oh.
Two world governments have recognized Bitcoin as an official currency in their countries. However, the countries are El Salvador and the Central African Republic.
Right. I'm not going to read any value judgment into that. That's okay. That was meant to be a joke, by the way. No. Right. But there are, may I say that the characteristic those 2 countries share relative to a very large and mature economy like the United States or China is they're small and we would call them emerging at best, right? And that's a factor that I'd like to highlight in an upcoming slide. You had a third thing.
Fidelity recently announced this past week that their 401k IRA holders would have an option of purchasing Bitcoin as a security in 401ks of anywhere from 15 to 20%.
But just like any other investment in a 401k, if the market goes south and it gets a value of 0, that volatility, you're done.
Yes.
Or if the market becomes illiquid and you'd like to use that to take a draw on your 401k when you're 98 years old, you also have to wait.
Yeah.
Right. Waiting when you're, yes, and
Yeah.
sir.
No, I was just wondering, like, if you lose your code, like you're saying, and you can't access your money anymore, well, what happens to it?
So
Because
it's
that was
permanent,
what
right?
Part of his question was,
In theory,
like, where is it now?
right. So it's in the ether of the internet. It exists in electronic form as long as it exists.
But nobody can
There's no destruction mechanism. There's no furnace. There's no place where old blockchains go to die. There's no cemetery. Anyone, and this has been an ongoing problem for fraud investigators, fraud examiners, because crypto has been stolen and then it doesn't appear in the market. These are clever criminals. They're going to let that age like fine wine, and they'll use it in 5 years, 7 years, 10 years, and in locations where no one's looking. There's no current central repository for all the code and the blockchain logic, because the whole idea is that would suggest oversight, and this is all about, right, skirting everything. So it doesn't cease to exist. Please, Lee.
Speaking about fraud, what is your knowledge about cryptocurrency and insurance?
Well, in what respect?
In the respect of how are people protecting themselves against?
Yes. So the news is, and this is breaking news, thank you very much, approximately a month ago, people in the Western economies did create an insurance fund to reimburse people for crypto fraud, and there's already been a draw on it. Now, in fraud investigation, it's one thing to have an insurance policy to cover a loss. It's quite another thing to get the original thing back. The original thing, the crypto, has never been recovered. People get a compensation, but like a lot of insurance reimbursements, it's the second best alternative, right? Sir? You?
Oh, it wasn't really a question, it was a comment on what he said. Where does it go? It stays on the blockchain.
Right. Yeah. Okay, anything else? I'd like to introduce a new term, because we're at Southeastern, we're innovative. I'd like to tell you that you've been involved in something close to crypto without even knowing it your entire lives, or at least your recent adult lives. I'd like to call it Faux Crypto. This will help people understand what crypto does on the internet if you didn't understand anything I've said so far. What are examples of faux crypto? Anything that's not money. You put money in a holiday gift card to your niece, $100, and the fine print says this is going to stop existing in 3 years, but she can use it at Starbucks between now and the end of 3 years as long as there's money there. Well, that's a medium of exchange, but can you get the cash back? My understanding of gift cards is no, you can't. A Starbucks card. Did any of you receive a government stimulus debit card in 2020 under the prior administration? That was denominated in dollars, but it wasn't dollars. This was like a debit card with a fixed dollar amount. That's awfully close to cryptocurrency denominated in US dollars. All of these examples I've given you for an American audience are denominated in US dollars, but there are other things, right? There are other things. Anything where you tender, I don't know, you go to a bar in the French Quarter and you tender $200 and you get beads and then you pay for your drinks with beads. It's very clever because you lose track of the beads and you're thinking, oh, this doesn't cost me much. These are 8 orange plastic beads. It's a very clever device. Payment vouchers are frequently used in the United States and accepted in lieu of dollars. A rain check. We've all had a rain check. Sports events, that sort of stuff. By the way, food stamps, tokens on old subway systems, and yes, even casino chips. How many times have I been in a casino? I was going to say something, but let me stop there. Not many, less than 5 times in my entire life. How many times have you been in a casino and you see a high roller tip a waitress or the dealer with a chip? That's a legacy, old economy crypto transaction, because they're getting a chip that they can then spend at the casino or they can turn in for cash. The problem with crypto is you can't turn it into cash. I went to Albertsons the other day and I told Lee, it's amazing. They have a machine that takes loose coins, and the loose coin machine gives you an option. You can press a button and you'll get what they call cryptocurrency back. Albertsons, here in Hammond. It's amazing, right? I didn't think they were part of this marginal economy. I thought it was like Albertsons in Hammond. But then I looked at it very closely and I asked the store manager, is this really Bitcoin? Is this cryptocurrency? And he goes, you can do that if you want, but what we really expect is this is a voucher coming out of the machine that you'll then use to buy food. The person at the cash register will accept it in lieu of cash. We expect that people come in with their loose cash and spend it on food right away. There is a very interesting case about 7 years ago where a couple traveled around the world and they said they were only going to pay for travel, lodging, and food with Bitcoin, and their experiment was designed to test how far Bitcoin had traveled around the world and its level of acceptance. Here's what happened. They made it around the world. Their only difficulty was, as they landed in a new city, it took them time to research that one hotel that would accept Bitcoin or the one transportation service that would take Ethereum or something like that. So it cost them time, and that theme is going to come back. But as of 7 years ago, you could, in fact, in theory, live exclusively in a crypto economy. I don't know if you should be happy about that. El Salvador, and what was the other place? Central African Republic?
Yes.
Okay, great. Cryptocurrency is widely used in smaller economies. Please change your perspective as Americans for 30 seconds. In the United States, the dollar is something we've become comfortable with. Crypto looks like this odd thing. Even the word crypto suggests a lack of credibility. But in some of these smaller companies, crypto, because it's become global and can be used for almost anything, has more credibility than the local economy's currency. And therefore, it's replacing it. In some marginal economies, similar to the ones where Nike has its offshore factories, for example, places like that, around the Pacific Rim, the economies are so weak, and some of the players are trying to avoid massive taxation, that they use crypto to avoid any oversight by their government while they're trying to sell goods to a Western customer. It's extremely well documented. Lee and I just returned from vacation. I learned by speaking to a member of NATO Armed Forces when we were online at the airport getting our boarding pass that crypto is already being used to buy weapons in the conflict in the Ukraine. And this is not new. It's not the first conflict where this has been done. And now I'd like to suggest another theme, because every so often morality pops up. You notice crypto is popular in marginal economies, marginal countries. It's also popular for anyone who wants to avoid oversight, anyone who wants to cheat the system. Arms sales, there's a movie starring Nicolas Cage about arms sales. It's not a pleasant story. That's what we're dealing with here. Should you use it? Without any value judgments, let me give you my top 2 reasons for using it. Should I use it? Reason number 1, if you're in business, it may increase your sales. Let me now speak with you as a business school professor. You're eventually going to max out on your core domestic market. The next step in economic history of the United States is that the American company goes abroad, sells to a non-American customer. The price they pay, other than sales prices might be different, is they might have to accept a foreign currency rather than the US dollar. So this might increase your sales because you can access the next marginal customer who can't deal with you in US dollars or won't deal with you in a documented transaction, who feels safe with the anonymity of blockchain distributed ledger technology. Because you see, in blockchain distributed technology, you don't actually have to identify yourself. You just have to have the right code, and everything goes through. Reason number 2, I don't think it's as powerful a reason. I like to increase sales. That sort of drives most income statements. Reason number 2, if you can't increase your sales, how about controlling your costs? Well, all of a sudden you might be able to buy some of your supplies or your inventory from a source that would actually prefer to be paid in crypto. Maybe that one merchant in China who cannot go through the regular system and is working on the shore south of Shanghai, They'd love to sell you something, but you know, they really don't want to pay taxes to Beijing. These kind of people. Well, so you have to decide whether it's worth playing with that kind of a participant. But if you can expand your supply sources, if you can pay your employees in different ways, you don't know. Your employees' personal preferences might be, yes, I'd love to have some crypto. There is at least one NBA basketball player who converted his contract into Bitcoin. I forget his name. And 4 years ago, there was an NBA player who insisted on being paid in euro because he thought the euro was going to be strong relative to the dollar. People have personal preferences that don't necessarily match yours. But I get back to the point I made at the very start of my talk. You too can create crypto. All you need to make it effective is one person who will accept the crypto you create. And you've got yourself your own crypto economy. You don't look excited by that. Now I'm going to segue. Is crypto clever or is it criminal? I've laid the foundation for criminal. I don't have too much to say because I don't know too much, and I'm not supposed to know very much because guess what? The transactions are supposed to be secret, anonymous, and in a distributed ledger. Exactly what, as an auditor, I hate. It's outside of the general ledger. Central banks are not supposed to control it because it's not money. As an accountant, I share with you this fear. Be aware that there is a perjury trap in every federal income tax document filed by an individual or corporation. Did you look at your 1040? There is a question on the front of the 1040. Did you use or do you have crypto? You want to answer no unless you did. If you answer no and you did, that's perjury. In the accounting tax compliance business, this is known as a treasury trap. People try not to answer it, and of course now they've lied, and it's a federal crime. And then they can take you to the cleaners. Did you use or did you hold crypto? Wonderful. So I've warned you now. I feel good about that. Crypto is infamously associated with Silk Road transactions. That sounds great, right? China, Silk. It's not good. Silk Road transactions from 15, 20 years ago, and they still happen in the dark web. This is about drug trafficking, sex trafficking, human trafficking. Of course, these kind of criminals don't want to be paid in dollars. You don't want to be like the Mexican cartel where you have so many dollars, you put it in the ground, you go and dig it up and you find that it's been rotted by insects. No, this is much better than that. As long as the electric code, the blockchain, has a perpetual life, you have something of value for these nefarious actions. While crypto growth is phenomenal, the global market, I think, is less than 3 trillion. I have to say I think because, again, it's secret. We're not supposed to know about it. So I wonder when these experts I talk to or listen to tell me it's 3 trillion, where are they getting this data? How are they getting this data? Transactions take an enormous amount of time to complete. That's because you've got to wait for each block to be confirmed. All the blocks have to be correctly written. No mistakes. Are you not good at typing in Excel or typing in Word? This is not necessarily good for you. You got to type in the right numbers and the right series of algorithms, numbers with words, etc. But then you got to wait for them to be confirmed, and you better have your key handy, or the whole thing falls apart and is blocked up. But the major problem with crypto for use in business is that it takes an enormous amount of time to complete a transaction cycle. That is supposed to be the principal reason limiting growth of crypto-based economies. More than a day and more than a day for the more complex blockchains. So you can't operate a business on that scale, right? Business gets, I think it's somewhat obvious. Sir, please.
If I go to the bank and I want to cash out $50,000, it'll take them 3 days.
Yes, But okay, that's a separate issue. That really is a separate issue. There are reasons for that. But if you had put your money in 50 different banks and then you took out 1,000, you could do that every day. It's just you'd have to spend time stopping by, 50 different banks.
Or if you've done a debit card transaction or a check for that amount, it would clear in less than a day.
Yes, but if you have that amount of, I'm very impressed. You all have that amount of money in your checking accounts. This is awesome. I'll get you to give me a gift, please. But if you're paying your credit card and your credit card bill zooms at Christmas and it's $15,000, you press the button, that'll clear within 24 hours. So the amount of money, there is an amount of money issue. There is a money laundering reason for what you are talking about. Banks are on the watch for people. Why do you need $50,000, sir? That's the question.
Do you suppose it's because they've taken your money and used it?
Who, the bank?
Yes.
Oh yeah, we're back to 1929. Of course they've used it.
Yeah, so they don't have it there.
They actually don't have it there. I have had conversations with bankers where
I don't think
if
fraud is necessarily the reason they don't give me my 50,000.
no, but it is preventative actions as part of money laundering legislation. If you are asking for $50,000, you didn't tell me in what denominations you wanted it. You start telling me you want $10 bills. They don't have that amount of $10. They have to order it. And they will obtain it, but then they'll also take a record of who they're giving that to. And what most people don't realize is every single bill we have in the dollar and coin economy has an independent serial number. They can trace this. So it's anti-money laundering. That's a real reason. But if you want to transact $50,000 and pay your Amex card, you can do that. Lickety split, no problem. Anything else? Sir, Miss?
So, you've never transacted,
Oh, no.
so you don't have any first-hand experience on how long it actually takes,
Absolutely
right?
not. No.
I'm not aware of it taking a day.
Takes like 30 minutes.
It's like, depending on the size of the transaction, it's anywhere from 2 minutes to like 6 hours.
What dollar?
And the
Yeah.
more miners on the system, the faster it'll get. So the more acceptance of the platform, the faster the process will become. Typically it happens when there's not enough miners to actually mine the transactions. I'm sure everybody's heard of miners.
Yeah.
but
Miners are a substitute for bankers, if I could put it that way.
but a lot
Sort
of
of.
them are just computer algorithms. Nobody's like sitting at a computer actually doing it. Proof of work versus proof of stake. I mean, there is, but it's pretty quick.
Right. That's been your experience. May I ask, what is the largest transaction you've ever executed?
Personally, not a lot, but my stepfather does quite a bit, and I've never heard of him saying it takes long. In my conversations with him, it's been pretty quick.
Okay, that's good news.
Yeah.
I am merely serving on this point as a reporter, not a direct observer. It's been reported to me by professional auditors that a constraint in adopting cryptocurrency in businesses, where businesses have a large number of transactions, is it takes too much time. It's much easier to just stay in dollars or stay in euro and use internet payment schemes. It's that kind of, so the setting is very different than retail setting. What's the largest cryptocurrency you've ever executed?
I've done a few $100 transaction, and that will go through in a few minutes.
Player. Right? And meanwhile, we're talking about 50,000 is troubling when you're doing US dollars. No, we're talking about like a small business trying to execute 100 transactions in one day. It doesn't happen.
Yeah. I know he's done tens of thousands at a time, but a ton of small transactions, maybe, but I don't know. I'm not sold on the it takes too long.
Okay.
Yeah, I thought that was a benefit of crypto, was
Yeah.
the fact that it's faster than the Swift banking system.
Yeah.
Okay. I can only say I trust the people who reported this to me because they're professional auditors, and I have used the SWIFT system directly in my banking days, and I know how to move money around if you give me the right kind of computer terminal and access to the SWIFT system. I've never had a problem. And the largest transaction I did was one transaction for $956 million in one transaction for one client. No problem. But so, okay, we have different experiences, but are you willing to go one step further and say, therefore, you're in favor of crypto and you want to encourage everybody, it's so quick, it's going to simplify your life?
No.
What holds you back? If,
It's emerging technology. It's still new. We're not positive of all of the repercussions. I encourage small, educated experimentation at this point on a personal and individual level with what you're comfortable with.
if I can say then, wearing the hat of a former Series 7 securities executive, then I only want you to do it if you can afford to lose it.
I agree.
Okay?
I agree. Never gamble or never invest anything you're not willing to lose.
Right, it's an experiment. And in a sense, you're in a casino. Yeah, in a sense, you're in a casino, right? When you walk in, you have to assume you're going to walk out without any of that money. And if you win, good for you. It's wonderful. Yes, sir.
We also have available software that a merchant can receive cryptocurrency at the top 20. And if he wants to keep it, he can keep it, or he can cash it in USD just as soon as he makes the transaction.
Instantaneous cash out. May I ask who you're with?
Well, MSS, but
Okay.
my son is a software engineer out of Utah. We develop software platforms for mining coins.
Are you a miner, may I ask? Okay, great. Am I right in characterizing a miner as a substitute for the central banker who creates the currency and who is the exchange platform of last resort? That's what a central bank
What we know how
does.
to characterize is decentralized.
No.
It's not centralized, as the bank is. We have so much manipulation in the market today, but when you're doing the blockchain, you have no way of manipulating because everyone has the same algorithm. Everyone knows what's going on. So
Yes.
it's an advantage of that. Now, sometimes people may be fearful to make that leap, but I would suggest anyone that would invest their lunch money.
Yeah.
But at the same time, I know of nothing that could bring me back a better return on what we're doing with mining crypto today. Nothing. And I would take the chance again and again and again.
Right. Let me paraphrase. You're making money as a miner, right?
Yes.
That is not a comforting thing for me as a retail customer. But congratulations. I think that's wonderful. I did say that the weakness in this assertion is not necessarily the blockchain. It's the human being inputting the data for nefarious reasons, or the fact that you can break into computer systems and then you can enter in whatever you want, or the example of the hardware wallet, that went wrong very, very quickly for about 200,000 people in the US. But is it criminal?
Isn't there fraud in almost any accounting ability? No
Yes.
matter-
Yes,
there's
it's
always
yes.
human and there's always computers.
I've got an auditing professor in the room. In fact, an honors auditing class professor, multiple auditing classes. Bob, is fraud perpetual? As long as you have a human being, there's a possibility of fraud, right? That is the problem we have.
But as a miner, you don't personally verify the data, right?
Personally,
Like you're not sitting there typing in
No,
numbers,
no.
right? No, it's the computer's doing it.
Right.
And it can see mistakes faster than a traditional method,
correct.
I believe.
I would say to that, I would, go to what he's got in his bullet points of in any, crypto fraudulation, there's never been any recovery.
Right, so that's this bullet point that I hadn't gotten to yet, but I was looking at the board because I wanted to emphasize it. There are now upwards of 8 documented, what I would call major league crypto frauds. There is an insurance fund that was just started that has provided partial reimbursement or coverage. There has never been a recovery of a lost crypto wallet ever. It just disappears into the Ethernet, it stays in the blockchain, and it will reemerge in the future because there is no expiration date on it. But let me say one other thing about your business, which is, again, I'm driven by the weaknesses to the technology that surrounds what sounds like a sure thing.
No sure thing.
Thank you very much, because I was going to say that's one of the things I was trained to understand as an auditor. There is no sure thing. But I want to raise one other issue, which is you're a successful miner as long as you've got the electricity to power up your operations, and that has emerged as one of the other constraints in the growth of the crypto economy. Not everybody can afford the servers, not everybody can afford the backup electric systems. How'd you do in IDA?
Well, my sons do it out of Utah.
Oh,
Right
wow.
now, we have machines coming in from China, and we'll start bringing them to the home. But we get the idea that it's going to take this much electricity. The technology has changed. It's going to take less electricity. One device will do 20 licenses. So it's changing. You're looking at someone who doesn't fear. I would not let. I'd go home. I could get run over by a car on my way home, but I don't let things stop me. I move forward.
Okay.
Yeah. But again, I'm telling you, everyone's not the same. Okay.
Of course.
I appreciate that. And I'm not in the business of trying to convince people of anything. I just give them an opportunity to let them make that choice.
There are some people who are now doing commercial transactions because of crypto who otherwise could not sell their goods, their agricultural goods, their manufactured goods, or their services. So in that respect, it's grown the GDP around the world, but less than $3 trillion worth. Right. Let me flip the question and ask you one leading question, and I'm going to push you just a bit here. What is so bad about the US dollar, or if I'm a European, the euro, or if I'm a Chinese mainland China person, the renminbi? What's so bad about these currencies that I should leave it for an extra transaction?
U.S. dollar is still strong, but with inflation 10%, we're having people that are converting their 401ks over to crypto by going to a custodian to self-direct your own. If you're looking at the market today, the growth on the market is not what we're seeing in crypto. The crypto is such a substantial difference in growth. So we're seeing 401ks just plummet, but with the crypto, it's going the opposite way.
Okay.
But everyone is to their own choice.
Of course.
It's whether they feel comfortable about, and that's where you have to be at. But never use your lunch money. There is no guarantees in this. It's just fun to invest, and what I enjoy the most is seeing someone who naturally would not have the opportunity to play with the big players. But in the crypto world, they can play with the big players by investing a little bit. I love seeing people become successful. It's a joy to me.
Okay, I got it. Thank you.
Thank you.
That's really good. My conclusion about crypto is it's not 100% verifiable as touted because we know how to hack it now. We get to the people, we get to their computers. We create a hard wallet, we grab the equipment. You lose your keys, you lose information. If you have poor internal controls at a company, there is a difference in my mind between the use of crypto on a retail basis, what you're doing, versus a business basis. The business has to have internal controls or no accountant who's worth their education is going to do the accounting for them. Right, and at the moment, signing off on internal controls boils down to computer internal controls and segregation of duties. Mostly because that's all we know how to do. We don't really know how to look at the blockchain system, and it's frightening to an auditor that confirmation in blockchain is an anonymous, almost automated process. That's very frightening. That's all I have to. Okay. Yes.
What sort of follow-up is there if you check, yes, I have used crypto on my income tax?
Well, first of all, you're going to have to make sure that a taxable transaction or a transaction meant to provide a tax shield, like interest on your home mortgage, if it's paid in crypto, has been converted the way you would convert a foreign currency into US dollars. That's tricky. Trained IRS registered agents get this transaction wrong all the time. And so you'd have to be aware that whenever these kind of transactions come up, your risk of audit increases. You become a red flag for IRS auditors. But the second thing is, you are opening yourself up potentially, and I have to underscore the word potentially, that people will ask to see everything that you did in crypto. And beware if you dealt with this so that you could buy drugs, sex trafficking, all those, anything illegal, right? This could open up the Pandora's box. And that is, in fact, it's not something they're actively engaged in, but they're setting the groundwork that this is where forensic investigation is going, including bringing in the FBI, bank examiners, things like that. They want to catch real criminals.
I have a question. Okay, since someone can use the blockchain and use this money at any time,
Yes.
say someone is filing their taxes, they use crypto, and someone during that year that they're filing taxes did something illegal, would you have to be accountable for that?
Oh, I shouldn't answer the question because you haven't given me enough facts. Are you accountable for someone else's act of criminality?
Correct.
There is a problem in the criminal code. Mr. Curate, I need your help. You can be charged with a crime as an affiliated party, right? An accessory. So the answer is actually yes.
Oh, wow.
Would you like the number of a lawyer?
No, I'm good. I was just curious, my mind just went there.
Like,
No,
are you saying, like, if you're a part of the blockchain, like, if you were part of the decentralized network that verified one of the blocks?
No, say that I was a person and somebody stole my crypto and they were trying to use it for something illegal.
So let me give you a catch-22. I don't know if you're familiar with the Alan Arkin movie, Catch-22. But if someone steals your crypto or steals your key, even worse, you want to find a way to report it. Because if you don't report it and then it's used improperly, you're going to have lots of steps to do with Douglas Curate Esquire to stay clean. But you build some defense by volunteering and actually filing a criminal report, a report of theft. Yes, I would do that. Sir.
I think it's interesting. I think about the end of May, maybe June, we're launching one that's backed by mortgage lending. And so we're going into that world, and there's a substantial amount of money by banks that are participating in that. We'll be able to pay the mortgage with cryptocurrency.
Yes.
So this world is changing really fast.
Look, if you can buy a Tesla with crypto, why not buy the house that you can park it in, right? Yeah. By the way, if I can share some inside baseball, when I agreed to do this conversation, I had just come out of a university meeting for another alumni group that included crypto as an investment alternative, a new class of assets you should consider. It was a very kind, alumni sort of thing, 45 minutes of free expert advice, and crypto came up. So the young lady who organized the meeting for the alumni closed the meeting by saying, we really hope, as you'd expect at a university, if you make a donation, and yes, we'll accept crypto. And the reason I'm saying this is, one of the things I asked Michelle when this idea came up is, of course I'll do this, Michelle. And it wasn't a condition. It was like a strong request. But can we please, because I just come out of the other university's alumni meeting, and I said, I hope that we can accept donations in crypto at the end of this conversation with you all tonight. And the answer has come back, no, absolutely not. For some of the reasons that are appearing up here. I think maybe I've spoken enough and it's time to wrap it up with a return to the survey. Let's see if you have...
First of all, I want to say I appreciate your time you've taken to make available this information.
Oh, thank you very much. But with my boss in the room, I want to say this is my job.
Okay. Thank you.
Yes, no, thank you. As I said in the beginning, it's really a pleasure for me to do these kind of things. Let's do the survey. Sir.
I had a quick comment. You had mentioned the Fidelity offering it in the 401ks. Just a small added information to that, though. So I'm in the financial industry, do a retirement plan for FOHS in Baton Rouge, Louisiana. When you have a retirement plan, there's a fiduciary, and even though Fidelity is willing to offer that, the fiduciary at these plans more than likely will not accept or not allow the cryptocurrency to be into the plan because of the fiduciary standards of these employers. Not to say that it will ever happen, but that is one interesting thing to keep an eye on if it's something that fiduciaries would ever be willing to accept.
Yes, as I said before, securities firms are having a hard time getting approval because your brokerage account is insured by SPIC insurance, which is their equivalent of FDIC. But if you give investment authority to your broker, they also have a fiduciary obligation under the law. So it's very complicated. But if I can, is it time for the survey? Okay, your choices are, is crypto clever? Is crypto criminal? You can vote more than once, or do you just have no opinion? And yes, if you vote no opinion, you can still vote clever or criminal. And yes, you can vote for all three. That would be fine. I'll give it to an ethics professor to evaluate when that happens. How many people say crypto is clever? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. And there's Michelle like this. Okay? Beware when an accounting professor counts. How many people believe crypto is actually criminal? Oh, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Is your hand up? How many people like to have no opinion on this topic? 1, 2, 3, 4.
I think you need to add a word, a choice.
Oh, what choice would you like?
Crazy. How many hands will go up?
Okay, wait a minute. That's actually a wonderful movement, and I'll tell you my motivation in doing this in a second, or a secondary motivation. But I'll add crazy. Because if I get crazy, based on your suggestion, then this talk has created something. How many people believe crypto is crazy? Huh. 6, 7, 8, 9, 10, 11, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 24. Now, 24. And your hand is up?
It's insanely crazy. It's amazingly crazy. I love it.
So let's do the simple analysis here. When we began, 3-to-1 ratio, that it was clever and not criminal, but also 2-to-1 ratio, I really don't know. I'm not convinced it's criminal. Okay, great. Now the ratios have fundamentally changed. Almost more than 100, actually more than 100% increase in people who think it's criminal. Now we've lost some of the audience, but that's all right. The number of people who think it's clever, accounting for the fact that some people walked out, I'm going to say it's roughly the same, if not slightly improved. It does have clever aspects to it. I once told my wife one of the experiences I had on Wall Street was to understand the break point of where insider trading information and trading on it stopped being clever and started being criminal, because I was seeing the goalposts being moved all the time. But every insider trading scheme has a bit of clever attached to it.
I think we could add a word to criminal. We could put, I think some of the choices, decisions, because it can be criminal.
I
It
think
can
the
be.
people are criminals.
Yeah.
The technology isn't criminal.
Yeah.
No matter what you do, you will have people who will exploit it.
Thank you.
Now, I love what he brought up about if you mark it on your tax sheet, they can audit you. I mean, that's a negative repercussion to doing the legal thing with the technology.
Right.
There is the dark web before crypto. People were doing human trafficking and drugs, and that has never not been a thing.
But Miss, I got to tell you as a CPA, right, even though I don't do taxes, they got you on this coming and going. That's why it's called a perjury trap. If you answer no, and yet you have a PayPal account, technically the answer is yes. And then, you know, the next series of pages open up and you got all the, but who in their right mind has a PayPal account that they've used and used it for crypto?
Wait, so because you have a PayPal account, you had to say yes?
Oh no, I didn't know this existed until after I filed my
That's not how
taxes.
I
I'm
read
good
this-
to go.
That's not how I read the sentence. It said if you own or have transacted in. Just because you have
But
a PayPal
when-
account doesn't mean you own it.
No, that's not the interpretation I've been given by a tax preparer. And then in the whole world of tax preparers, not everybody agrees because of their experience going up against the IRS.
Next few years of tax litigation are gonna be interesting to watch.
Right.
Well, we'll figure it out.
Now, the other thing I was told by the tax experts sitting in this meeting that I attended is, this is a momentary glitch in the regulations. We'll solve it before it's time to file taxes. But that was like April the 12th.
I marked yes. And I mean, if they pull all my stuff, I'm not doing anything illegal. I don't have anything to hide. The people who have things to hide that are going to do it are going to get caught.
Right.
Probably.
Yes, and I discovered the functionality in my PayPal account, which I haven't used for over 3 years,
Yeah.
after the April 15th deadline. So
Yeah,
I had no idea.
I'm curious how they could make that stick in the sentence. Because you have a PayPal account doesn't mean you own crypto or have ever transacted in crypto. That's
Are you gonna tell the IRS they don't use proper grammar? I don't know.
I mean, I'd get a really expensive lawyer.
No, Mr. Curate, you're up. Reasonable rates.
Yeah. Reasonable rates. You got more?
Right.
Accept crypto?
Yes, Douglas, do you accept crypto? You know, but in the whole world of faux crypto, those of you who take a meal every so often at the student union, if you buy meals in bulk the way I do to get the discount, that's actually what I've called faux crypto. Because I don't think the university is going to give me my cash back or give me a credit on my credit card. I got to eat the meal, right? So it's faux crypto because it's in the electronic code attached to my university ID. But here's the other interesting thing that happened. I'm not going to say that you all learned something or that I gave you information, but you formed opinions. And that's more than many of you had before you came in. You came in with a curiosity, and now you have a point of view. And I think that makes this worthwhile for me. And it's been very enjoyable from my point of view, Michelle. So I don't know. This is...
Yeah, I think that was very informative. I still don't know if I understand everything, but I am not an accountant, so I will leave it up to you guys to figure that out. But thank y'all so much for coming. I hope you enjoyed it. I just want to remind everybody, please take a look at Southeastern Connect platform. There is some great conversations going on there, and for your students, you know, we really invite you to join and ask questions. Ask these kind of questions to the alumni because they're there to help, and they definitely want to give back to the university and to be a resource for our students. So I just encourage everybody to take a look at southeasternconnect.org.